I'm Edward Warfield. I'm the publisher of City Biz, and I'm honored today to interview Lauren Fernandez, who is the founder and CEO of Full Course. Welcome, Lauren.
Thank you for having me today.
Can you provide an introduction to Full Course?
Yeah, Full Course is our restaurant investment and development firm. We specialize in incubating, accelerating, and investing in emerging fast casual restaurant and food brands. And we have been here for almost a year and a half now.
So your background included you were general counsel at Focus Brands and you were an operating partner at Origin Development Group. Can you provide an overview of your career and the decision to start Full Course?
Yes. So I left Focus Brands a little over 7 years ago. And when I left, I started consulting in the consumer packaged goods space, basically helping restaurant groups establish new lines of revenue for their businesses by adding retail products and leveraging that brand equity onto retail products. And in the process, met a couple of people who encouraged me to invest in restaurants, and I had always wanted to do it. And so what ended up happening was we started Origin Development Group, and Origin was backed by a $10 million investment. We secured the rights to a brand called Chicken Salad Chick in the greater Atlanta DMA, as well as Augusta and Athens, and purchased 3 restaurants in a deal. And then I rapidly, in less than 20 months, added 8 more restaurants to that and 3 to 4 non-traditional locations. And we had 4 under development when we were approached to exit and sell. We ultimately sold the brand, our units back to the parent company of the brand at the end of December 18. So I took some time when I sold the restaurants and thought about what I wanted my contribution to the restaurant industry to look like next. And one of the major issues that I had when I was growing those units so rapidly was maintaining best-in-class operations is really difficult if you're also running development. Those are 2 full-time jobs. And I have no shame in admitting it nearly broke me. But I thought if I have all these resources behind me, education, experience, a great team, a great brand, funding, how hard must it be for all of these new and emerging restaurant brands that are out there? And what are the bottlenecks or the struggles that they're facing and really achieving higher levels of growth that really see the returns that they deserve for their brand? You know, the other issue that I saw was there's not a lot of diversity in our industry at the higher levels where brands go national. And one of the reasons for that may just be that we're lacking those early stage investments in brands that are backed by women, minorities, and from a cultural perspective. So we started putting together what Full Course could look like. And that was really the genesis of my idea of really putting together a turnkey solution for emerging brands to be really nurtured and grown as brand leaders, and needing the investment aspect of this to have a fund behind us to be able to grow these brands rapidly to a place where they would become a target for larger private equity groups.
And so walk us through the Full Course process.
Right. So we work with brands that are interested in growth. They're usually fast casual, anywhere from 1 to 10 units. And in doing so, we evaluate them on a number of different pillars to determine whether or not they're ready for our investment. Our first phase is restaurant optimization. It's usually between 3 and 6 months. We do a flat fee consulting arrangement, and we go in and really optimize the business for maximum efficiency and profitability. And we make sure that there's a really solid foundation before we ever even start talking about growth. Secondly, we have a phase called growth planning, and this is something that we take very seriously. It's about a 3-month process, and it starts with a 2-day retreat with our clients where we really get to the bottom of why they want to grow. What are their real goals? What are their missions and objectives? What's their real purpose in growing the brand? And from that, we develop a 1, 3, and 5-year trajectory for the brand, and that includes growth into multiple channels like franchising, brand licensing, consumer packaged good development, traditional brick and mortar development, and non-traditional development into airports, stadiums, arenas, hospitals, etc. From there, then we move into our investment phase, Our fund usually backs the growth plan and invests into the clients, and we turn around and deploy that capital with our development team. And so therefore, we allow operators to maintain majority interest in their business, focus on what they do best, which is operating the business, while we deploy the capital towards their new units and new ventures. And that's basically the full course playbook.
And can you share the 5 tips to thrive during COVID, and how are entrepreneurs rethinking the restaurant business in the context of COVID?
I think one of the things that COVID has done to the restaurant industry is highlight the necessity of really treating people as your first and highest priority within the industry. We had massive understaffing even prior to COVID. 73% of restaurants reported being understaffed. And I can attest that that was reality because we constantly were staffing all of our stores during that time. So that was a very real thing. So we had a recruitment and a retention issue in the industry even prior to COVID, but I think COVID certainly put a giant spotlight on that issue. So I think number one, I would say that we really need to focus on putting people first. And if you consider that the vast majority of employees are under the age of 24 in our industry, it's time to meet them where they're at. We really need to start creating benefits plans, incentives, training, and mentorship for the next generation of this restaurant industry. I think as a secondary matter, not a lot of restaurants were operating on optimal profitability. So they didn't really put a ton of time or energy, because no one really has that kind of time or energy, into thinking about really what the offering was, the service level, and what the actual returns on those investments in the hours of labor, the touches on the food, the amount of, the total amount of the food cost. And so I think it's forced us as an industry to get a little bit more lean and mean about what we're offering to the general consuming public and what the value proposition is. Third, I have loved for a long time, and in my time as an attorney before I became an operator, I was deeply steeped in product development and commercialization. So I am very happy to see that a lot of restaurants have adopted a takeaway model, a to-go case, or have attempted to, from like a cottage industry perspective, manufacture within the 4 walls of the restaurant a lot of their fan favorite sauces, mixes, or even just some meal prep to go. And I think that's a great revenue channel for a lot of restaurants that if you haven't done it yet, it's where we're headed. And it's a great first step to test the market and see what really resonates with your consumers. I think fourth, I would say loyalty. Loyalty is very key. It's extremely important to driving consistent and regular revenues to the business. And so many restaurants, if they have not yet, really should have a solid loyalty and rewards programs where there's benefits that are only available to the members of that program. When they sign up and when they're regularly engaging with those customers, they're going to find their frequency of visits will be there. And I think fifth, and this is really kind of rebounding now in this phase of COVID, is the catering aspect. Catering has an opportunity in a normalized market to add up to 25% additional sales top line. And that's a really critical metric for a lot of restaurants, and they're missing the boat. And one of the things to consider is, as we're going back to business hybridized models, is really meeting business needs. So when there are meetings, obviously traditional catering has to shift a little bit. Some companies are not, we're seeing, as comfortable with buffet as they may have been in years past. So really thinking outside the box here and offering multiple delivery points. So if you have people remote, offering a link or a URL to a delivery service that can deliver the same meal to someone remotely, but then also delivering meals to a centralized location where there may be an in-person meeting, and having them be more packaged as an individual meal where someone can consume it without concerns over the safety of a buffet structure. So if you haven't activated catering yet, it is a good opportunity and a time to start really building out that kind of program for your restaurant brand. And when you're doing so, be mindful of who those corporate targets are, who are the bigger clients that could really significantly add return and recurring revenue to your business.
So let's drill a little into your affiliated investment fund, the FC Polaris Fund. Can you tell us some of the investment criteria, what stage, where are they, some samples of your portfolio companies? Yeah, just give us a quick overview of the fund.
Yeah, so one of the things that's important to understand about Full Course is unlike other private equity groups, we only raise a $20 million fund once we know where the target investments are going. So roughly every 5 to 7 clients who participate in our process, when they're ready for development, we kick off a $20 million fund to really contribute and back the development and growth of those clients. So this first fund we kicked off in November of last year of 2021 with the intent of having a series of closes throughout this year because our first set of clients will be moving into development phase in third quarter of this year, 2022. And so the way that the fund works again is it's about a 3-year deploy period because keep in mind that unlike other private equity, we know exactly where these funds are going and how they'll be allocated. So unlike traditional PE where you might have a 3 to 5 year deploy period of finding deals to do and a 10-year horizon, our funds have a 3-year deploy on average and a 5-year horizon. So it's a very quick turn. The idea behind the fund is actually quite simple. When you have 1 restaurant to 3 restaurants, really their value in the marketplace is around 2 to 2.5 times the EBITDA of those restaurants. But when you get these restaurant brands up to a larger ongoing concern where they have solid structure, great operations, and a number of channels of revenue, and you get them north of about $2.5 to $3 million in EBITDA, or maybe 10 units or more, the multiple shoots up into double digits. And that's really what we're doing at Full Course. We are helping these independent restaurateurs get over those initial hurdles and bottlenecks to their growth, and coaching and leading them to that area where they would be a target for investment for larger private equity groups. So the way the fund works again is we have a $20 million fund that we raise for approximately every 5 to 7 clients. The first fund is now open. You can learn more about it at fullcourse.com. And we really set this up to be extremely attractive to the first fund investors because Full Course is a new company. We understand that investors want some different types of security with the investment. So the terms of that investment are really, I think, attractive to people who especially understand the industry, understand how multiples are applied in valuation. And that is something that we see often. A lot of the investors in the fund are people from the restaurant industry who, like me, were former multi-unit operators and are still multi-unit operators. We have a number of restaurant executives in the fund, of course, some friends and family and some family office as well.
What are the growth plans for Full Course, and is it all tied into the fund? I mean, are they 2 separate sort of growth plans, growing your fund and portfolio companies and growing the consulting business?
With respect to Full Course's operations, we have plans to take on as many as 12 clients this year. So we certainly have invested in the people that we need to grow our team so that we can handle those kinds of client services and continue the strength of our pipeline. This year, we will be adding a number of educational workshops where at a lower price point, people who are interested in the Full Course model and consulting services can partake of them in a more of a group setting. So we'll be launching those as early as February of 2022, as well as some a la carte courses to assist restaurant operators who may need help only in 1 or 2 areas. So Full Course operationally has big plans to grow at least 12 members on our team this year. We have 2 new members that will be joining at the end of January, and we're very excited about that. And both the chief people officer, and culture guru that we have coming on board, as well as a chief operating officer. So I think a lot of human capital will be the target for the growth for Full Course. Its revenues are derived primarily from a management fee from the fund, a development fee from our clients, as well as consulting fees and those educational programs that I spoke of. In comparison, the fund is really the beginning of what will eventually be its own private equity entity. And so as this first fund comes to a close, we already are looking at the pipeline for the second fund in terms of clients that will be ready for that second fund. And I think when we have more than two funds, we will start building out the infrastructure for a separate, truly operating entity for more structured traditionally like a private equity group, if you will. But right now, I am the fund manager. I'm the managing partner for the fund itself. They are two separate entities for legal purposes, but I am in control of that fund as the managing partner.
So is there any part of the full course story or the Lauren Fernandez story that you haven't shared with us that you'd like to share with us?
Yeah, so I really look at this as an opportunity to shape our industry at a time when it really is struggling to find its new identity and new footing in this era. In a post-COVID world, how are we going to rebuild better? And I have had the wonderful opportunity to work with some fantastic folks in this industry, both as counsel, as an operator, as a franchisee, and as a franchisor. And I really have an intent through Full Course in helping to shape the next generation of restaurateurs and really help build a future that I think looks more inclusive, looks more diverse, and is built stronger so that we can withstand the types of bumps that COVID has certainly thrown at us by building a better base of revenue streams, building it on a foundation of people first. And that is one of the main reasons that as an investment strategy, our fund does not take a majority interest. The biggest interest that we take is a 49% stake because we very, very much feel that original owners should have a seat at the table and they should be in control of their business when they start reaching second and third rounds of investment and not be diluted so much that they're not really realizing the returns on their really hard fought and hard won investment, all those blood, sweat, and tears that go into building a brand. I think if there's one thing to take away, it's that Full Course was really built by operators. Like, we really get it. We understand. We've been there, and we designed Full Course to be the perfect partnership that any emerging restaurant owner needs.
And thank you for sharing your career, your history, and your entrepreneurial journey. And we wish you the best of luck and keep us abreast of all the additional courses that you add to Full Course.
Thank you. I certainly will. And we do have a ton of resources available for free on our website at fullcourse.com. There's more information on COVID tips, operations tips, franchising tips, as well as a number of ebooks that are available for download. And of course, investment information as well on our website.
Thank you, Lauren.
Thank you.